Joining us now to discuss the impact to pharma stocks is Evan Seigerman, BMO Senior Biopharma Analyst. Evan, great to have you with us. First, I wanted to get your thoughts on the deal that was just announced within the past half hour.
Breaking news for sure.
So Merck shares are higher, and we knew that it faced the patent cliff for Keytruda in 2028.
Right. So one of the things I've always been saying with Merck, and kind of the reason one of my downgrade back in December was they have this huge patent cliff, Keytruda $30 billion drug, going away in some sense at the end of the decade. A deal like this helps. Obviously, I don't know all the specifics. They're doing a conference call at 8 a.m. But what I found really interesting is that this is a commercial stage product. So they're not buying an early R&D asset. They're buying something that's on the market. So that might hint that they're trying to supplant revenues now versus something that's going to come online in 2032.
Which one is this for COPD, and how does it work? There's some combination therapies for it.
Ohtuvayre?
I'm not really familiar with the asset. It's a novel mechanism. That's what they said in the press release. So it's not like an inhaler like we've seen with albuterol, or it's not like Dupixent.
Pulmicort, Dupixent.
Dupixent's approved in some patients. Regeneron Sanofi had a drug that was not successful.
Yeah.
So
it's a lot of
a lot of them. There's a lot of people with COPD.
Yeah.
There's a potential also for treatment for other respiratory illnesses. So there's an upside to that $1 billion peak sales estimate.
Asthma,
potentially.
Well,
yeah. More deals for Merck specifically, or as you see this, Verona deal, do you see sort of this? I don't want to say smaller. $10 billion is not small, but I mean it's definitely digestible.
I mean that's. Like all the companies I cover that want to do deals say this like $10 to $15 billion range. That seems to be the sweet spot. They can do that with cash, get a little bit of debt. It's not going to stretch them, and it allows them to build a portfolio that's not so anchored on one asset. Remember, Bristol Celgene was a big, ugly deal. Not a lot of folks liked it. And even Pfizer Seagen was a lot for Pfizer to digest. So these deals are much more palatable, and I think investors will react positively.
In terms of pharma, more broadly, we've seen a little pickup in the stocks of late, along with a rotation in the market overall of money going into beaten down areas, unloved areas. And I'm wondering how long do you think that lasts? And is the pharma tariff an overhang to that sort of pickup?
A few things. I've been doing a lot of marketing, seen a lot of investors recently. Sentiment has gotten better since April, which was like the lows of the lows. So that's a good thing. In terms of tariffs, the commentary yesterday, 200% tariff, then Secretary Lutnick coming on, I think CNBC saying, well, you'll have time to build factories, indicates that this administration wants manufacturing here. So I think that's what they're pushing for. I don't think we're ever going to see 200% tariffs across the board. Maybe for someone that doesn't play along and build factories here, that could happen, but not tomorrow necessarily. There's also one thing, the Section 232 investigation. We'll get results from that, I think, this month. Looking at the kind of national security implications of onshoring pharmaceutical supply chains.
Yeah, I mean, one critical aspect is that a lot of the active ingredients are actually manufactured abroad. Even if they are even if the final drug is manufactured here, the active ingredient is abroad. So there's a lot of questions, I guess, probably in terms of how this would be implemented, at what stage of the manufacturing process.
And the API also, like some small molecules, a lot of that's from China. A lot of the biologics, some of that's made here, some of that's made overseas in Europe. So it's a very complicated supply chain. There's not one solution, unfortunately.